Hi, this is Akmir with the Bulletin Board Heroes here at Vox Markets for Tuesday, the 22nd of March. And starting off with Sizzle, where there's been a minor bear trap from below the initial March support of 2.25 pence, a higher low in the last couple of days versus the February support there, which was at 2.17. But basically, the shares need to break that 2.5 pence area. If you're fussy, maybe the 50-day line at 2.6, target while we're above 2.2 up to 3.5 pence, which is the top of that rising trend channel from back in December. We're backed by a bullish divergence line from December and then a little uptrend line in the RSI window, sort of second RSI support line, which has been in place since the beginning of the month, third touch of that, so that might give it some gas. Moving on to Cenkos, which is not a stock which I think I've ever covered before, but who knows, something might happen this time on a rather quiet day as well. Here we've got a situation where the shares are gapped up off the lows and held the gap and actually then broken the gap day, which was around 71, day high rather, which was 71 pence. Above that, we're looking for the low 80s, so that would be post October resistance for the shares, but that gap reversal looking rather helpful for the shares, and also we're above the 50-day line at 68 pence. We should take a positive view perhaps while we're above the 50-day line at least. On to a stock which I know is being watched by some of the smarter people in the market, Eco Atlantic, and the question here is where the shares will head once they, or if they break recent February resistance at 38 pence. Looks like we're in a rising trend channel from back in November. Top of the channel currently heading towards 46 pence, which may be hit by the end of next month. We're backed by the Golden Cross buy signal that we had in the middle of February between the 50-day and 200-day moving averages, and the shares well above the 200-day line since and bouncing off the 50-day line, which is what you see in the more strong situations. Also an uptrend line in the RSI window, which should back the recent moves to the upside. Requested stock coming in the form of Eve Sleep, where it looks as though it could be third time lucky for the shares breaking and holding above the 50-day moving average around 2.34 pence, or 2.3 pence rather. Above that on an end of day close basis, looking for a retest of 3.5 to 4 pence. Top of that triangle from back in August up to 4.25. Maybe by the end of May, and hopefully a bit sooner. It could be by the end of next month. But we're also backed by that uptrend line or bullish divergence line rather in the RSI window. The third bounce led to the spike that we had last month, and we've basically held the gap and then moved up from there, which makes sense from a bullish perspective. On to KP2, Core Potash. Here we've got a situation where I think we know from the Russia-Ukraine debacle or crisis that fertilizer is going to be in short supply. Here we've got the shares just breaking recent resistance around the 1.2 pence level. Decent end of day close above 1.25. We should be heading up towards 2.4 pence, which is the top of a rising trend channel from this time last year. Time frame on that, the next 1 to 2 months, and perhaps or hopefully a little bit sooner than that. We've also got the shares bouncing off the 50 and 200-day moving averages, which are both rising. They did that the other week. So above, at least while above a penny, we're looking for 2.4 pence on KP2. On to Myla, which doesn't have much of a chart yet, but here it still seems to be that we're in this rising trend channel, a wide one from back in November. Top of the channel heading towards 3.7 pence, and that's where we think the shares are going while they hold above the 50-day line at 2.4, and that hopefully could be seen by the end of next month. Covered Purple Bricks a few days ago, a week or two ago, I think, and shares making some progress now. We were looking for the shares to make it to the top of that gap down that we had back in December, so that's around 31 pence. Not far off that now, so an end of day close above 31 could take the shares up to as high as the 200-day moving average at 45, which would be quite a result. We're also helped now by the way that the 50-day line is rising. When it does that near the lows, it tends to be a decent signal. as does the double bounce, the bullish divergence we've got there, the November to March bullish divergence. Lower price low, but higher RSI there, so that is also a positive. Over and above the very positive candles that we've had in the last 4 sessions for the shares. Moving along to a stock which is not exactly the most liquid in town, and I suppose it's here because it's been a rather dull day in terms of many of the moves that we're seeing on the small caps. But we've broken a line of resistance there on T42. Basically did that to the beginning of the week, around 14 pence, and while we're above that, looking for 20 pence initially, which is the 50-day moving average, and after that obviously we can dream of better levels, maybe up to the top of the rising trend channel from back in October, up to 33 pence on a 2-month view. But the moment shares bouncing off very oversold area, and also bouncing off, bouncing above the 200-day moving average. They haven't been below the 200-day line since back in September, so that is a very strong piece of price action, and that should ensure the shares head up towards the highs again. It'd be surprising if they did not. On to Tirupati, which has managed to at least regroup above the 70 pence zone. We had that low there at 64 back in December, bear trap below that earlier in the month, and decent rebound for the shares since then, at least in percentage terms. We've also got a bullish divergence line, which should squeeze the stock higher. What we're looking for now really is a decent end-of-day close above the 50-day moving average at 73 pence. If we can get that, then we're looking towards the low to mid-80s, which is where the stock was back in January. Finishing off with a stock which I'm always looking at with trepidation, and here we are again with UKOG. I suppose the positive here is that we've got an uptrend, a bullish divergence line here, off which the shares have bounced. They've also bounced above the 50-day moving average, which is rising, which is another couple of plus points there. That does suggest that we could see the shares in the upper teens, so 0.17, 0.18, maybe over the next few weeks. But we're always concerned that there might be some kind of fundraise with that company, but hopefully they'll manage to resist that temptation for a little longer. That's it from me today. More updates tomorrow.